Hey, what's up, my friend? So, welcome back to this month's market analysis, the month of September. A little bit late this month, but hey, better late than never, right? So, for those of you who are not familiar with this, right, what I do is that each month I produce a video like this where I break down my thought process of the markets. I share with you my losing trades, my winning trades, the thought process behind it, why I enter the trades, how I manage it, and also talk about potential trading opportunities, right, that is coming up in the month ahead. So all this and more in today's video. Let's get started. So the first thing that I want to talk about is pound yen. So this is a trade that I actually shorted, right? And let me walk you through my thought process. So I was looking at this chart and I noticed that this market is in a downtrend. You can see that the price, it's below this 20 period moving average. The trend is pretty strong towards the downside, right? A series of lower highs and lower lows, quite obvious. So at this point in time, I was thinking, hey, this trend could possibly continue lower. After all, the market structure is intact. And I noticed that there is this swing low over here. And I thought that low could possibly be broken, right? If I didn't think that way, I wouldn't have went short. Okay, so I went short on this market. The entry trigger, it's there are a couple of ways to do it. Some trader might just go short on the price rejection at this 20 period moving average. For me, I was timing my entry on the 4-hour time frame, right? And you can see that over here, the market formed a head and shoulders chart pattern. Okay, you can see that. Let me just draw this out, right? Familiar? Okay, so when the price broke below this neckline over here, okay, I went short on the breakdown. Stop loss is 1 ATR above this highs. So I use the ATR based on a daily time frame. I find out what's the ATR value and add it on top of this highs, and that is my stop loss. And the reason I do this is because I don't want to get stopped out at the highs. So let's say this over here, right? The market, let's say over here, let's say I'm short. Market could rally up towards these highs and then come down lower. And I don't want to get stopped out at the high. So this is why I give my trade a little bit extra buffer, right? So I don't get so-called stop hunted to say. So in this case, this trade, right, market went in my favor, hit the lows, right? Almost to the pip, right, over here. And then it reversed and stopped me out for a loss. Okay, you can see that. Eventually the market rallied up higher and I got stopped out for a loss. And this is a losing trade for me on pound yen. And if you ask me, would I have taken this trade again? Definitely, why not, right? I'm trading with the trend, trading from an area of value, and in this case, right, the market happened to reverse at this swing low. Could I have predicted it? I couldn't, right? I have no idea which swing low is going to hold and which swing low will break, right? But if you're trading with the trend, generally most of the time, right, you'll notice that it tends to continue breaking the swing lows along the way. And in this case, it just happens to be me shorting into the final swing low before the market so-called break market structure, breaking above the previous swing high. Okay, so this is pound yen. Another trade that I took that I want to share, it's gold. Okay, so gold. So gold is a interesting one. Let me just pull back out again this chart. You can see that at this point, gold, it actually broke out of a multi-year highs. I think if you look at last month's video, we talk about this. Okay, I said that gold, it broke out of a multi-year highs, right? This is the breakout over here. And at that point in time, right, many traders, they are going to chase this market. They look at this, Rayner. Look at, the breakout, how bullish. Look at the momentum, Rayner. Right, so they chase the breakout. And the problem with chasing breakout is there's no logical place to put your stop loss. Where are you going to put your stop loss? Ask yourself. Right? Let's say you buy at this highs or near the highs. Trust me, right? Most traders, they will not put their stop loss below this swing low, even though that's a valid market structure. Why is that? Because the stop loss is too wide. They'll say the stop loss is too wide. Right? Why have such a wide stop loss? And they will, put their stops at any random level. As long as they have a stop loss, they are justified. Hey, I got a stop loss in place. That's the purpose of a stop loss, to have a stop loss in place. So they put their stop loss, here, and here, And the problem with setting a stop loss at random level is that if you observe market structure, market can pull back into previous resistance, now becomes support. There's a good chance that, hey, this market could pull back into what we know, right, as previous resistance becomes support. And in this case, the market, I don't think it pulled back to the exact level, but it did pull back. And probably you would have gotten stopped out because your stop loss is too tight. Okay, so this is why I always say don't chase breakout. Instead, what you want to do is to look for the first pullback. Okay, that's a opportunity for you to get on board the move. So I was looking at the first pullback, and in this case, right, it appeared in the form of a trend continuation pattern. If you just pull out the 20 MA, you notice that that's where the 20 MA come into contact with price, and the price, seems to be hovering above it. And this is where I would long the break above this highs. Okay, when the price break up above this highs, I went long, stop loss, right, 1 ATR below this low. At this point in time, right, I now have a market structure that is nearer to me that I can reference to set my stop loss. Previously, if I want to set my stop loss, right, this will be the nearest market structure. This previous resistance and support. But now the market has formed a new swing low. I can reference this to set my stop loss, and it's a tighter stop loss to say. And with a tighter stop loss, you can put on a larger position size and still have your risk kept constant, right? Risking that same 1% on each trade. So I went long on the break of the highs. My trade, right, on this, right, is to, my idea on this trade is to ride the trend, because it's a strong trend, right? It's a break of multi-year highs. I want to ride the trend for as long as possible. So I'm trailing my stops, right, using the 3 ATR, 3 times the average true range. And this indicator is quite a useful one, the Chandelier K indicator. You can see that it's this blue line over here. This blue line means that this is 3 ATR, right? 3 ATR from this highs. You take this level, let's say this level is X, minus 3 ATR, the value, right? Just find out what's the ATR value, multiply by 3, okay? X minus 3 ATR will give you the value Y, and this value Y is this light blue line over here. Okay, so I pretty much got on board the move until the price broke down over here, and here, this is where I exited this trade on the breakdown. Okay, so that's the piece of so-called move that I caught on gold. Alright, so yep, that's to share with you on gold. Next one, right, to talk about, it's okay, so those are a couple of trades that I took recently. Now I want to share with you, potential trading opportunities that I am looking at this month, right? I think we have a few days more left for the month, so still have time. Where are you? Pound yen. Okay. So for pound yen, right, we talked about this earlier. I got stopped out, but right now I'm seeing another trading opportunity on pound yen. Let me get rid of this box. The lights are flickering. I think it's a bit irritating. And okay, so pound yen, you can see that the price right now came into this previous support and resistance. I just zoom back a little bit. You can see what I mean, right? It's a key level, right? Tested once, almost, twice, thrice, 4 times, broke down, retest, down, and now it's back here at this level, around the 135.50 level. So what I'm looking for again is for market structure on the lower time frame, right, to time my entry. So if you look at the 2-hour time frame, okay, you can see that right now the sellers, right, seems to be coming in. Okay, you see that previously from this up wave, right, that you saw earlier, you have a series of higher highs and higher lows, right? Higher lows, higher lows, higher lows, higher highs, higher highs, higher highs. So the first clue, right, that you are gonna get that the buying pressure is getting weak over here is that you have a series of lower high and lower low. Are you with me? An uptrend is intact when you have higher highs and higher lows. But when you get a lower high and lower low, it's telling you that, hey, selling pressure is stepping in. The uptrend, right, is starting to lose some of its strength. So I don't usually just trade, this break of structure, but there's a story behind this, because if you notice this, right now, the price seems to be retracing. And if the price can break below this, let's say this swing low over here, at this point, if the price break down, you now have a lower high and lower low. Okay, and on top of it, you are trading on a higher time frame. You can see the higher time frame market structure at this area of resistance, this key area of resistance. Right? So if that happens, I'm going to go short, have my stop loss again 1 ATR above this high, somewhere about here. That's my stop loss. And I would expect, right, this trade to move at least, right, to a minimum at this level over here. This is where our previous so-called mini resistance that could act as support, right? So this will be a level as possible targets. So I will be looking to short this market if that happens, and this over here would be levels that I'll be looking for to take profits off the table. In fact, what I'll do is I will see how the price approach this level. If it breaks this level, okay, I will then start to adopt a trailing stop loss approach, meaning that I will start to trail my stop loss using the previous day high. So let's say the market hits that level that I'm looking at, which is this level here. Let's say it comes down, retrace a little bit up, comes down, and finally hits that level. Okay, so what I'll do is I'll start looking at the previous day high and trail my stop loss. Meaning if the price breaks and closes above the previous day high, I'll exit the trade. If not, I will hold on to the trade and see how far it can go Okay, but let's say it doesn't hit that so-called swing level. Let's say this level is here. Let's say the price only comes down here and it retraces. It hasn't hit this level here. Then I'll continue holding the trade. My stop loss is here. And let's say the price now is here. So one of two things is going to happen. It's either going to hit my stop loss at this level, or it's going to hit down lower and approach this swing level that I've identified. Okay, if you have approached the swing level that I've identified, then I will use the trailing stop loss technique that I just mentioned to you earlier. Okay, so this is pound yen, and this is how I'm looking to trade this market. Another one to share with you, it's a pound New Zealand, another pound pair. Okay, so this one you can see over here, price also coming into this highs over here, this obvious highs. Okay, tested once and back then another time over here, right? Let me zoom back in. Yep, you can see that. Yep, this level over here, around the $2 level. Again, it can be a similar trading setup as the pound yen earlier. Like, you can go down to the 2-hour time frame and look for a break of structure. But if you look at this, right, you can see that this structure is different from the pound yen. The pound yen one is actually weaker because you saw that the market is really, starting to retest or break the neckline. Whereas this one here, they swing, higher highs and higher lows. It's still pretty much intact, right? The higher highs is also still intact. So if you ask me, right, between the pound yen and pound New Zealand, right, the pound yen seems to be a weaker pair to short at this point in time. But nonetheless, right, pound New Zealand is at this key area, and I want to share it with you as well to keep a lookout. And another thing to talk about is Bitcoin. So I don't trade Bitcoin because most of the spread, right, the brokers are charging is just ridiculous. But this is a market that I find that it really respects technical analysis very well, right? Why do I say that? If you just look back in time, right, you notice that this market really offers explosive breakout trading opportunities, right? If you just look back, right, over here, we have somewhat of a descending triangle, right? This volatility contraction near the apex, and then it broke down very nicely, right? Breakdown. And prior to the breakout, it forms another ascending triangle, right, over here. Another ascending triangle, which is the inverse of a descending triangle. Volatility contraction, and then we have the breakout. Okay? And right now, what you're seeing is that we have another potential descending triangle. This volatility contraction pattern is forming over here. And if you ask me, right, my opinion, right, is that if it breaks this swing low, right, we could see another strong move down lower, possibly retesting this level over here on Bitcoin. Okay, so this is why I said that Bitcoin, it respects, technical analysis pretty well. And not only that, right, if you look at the levels where it breaks out of, let's say resistance, it tends to become, resistance turn support, right? Let me just share with you. So in this case, you have something like, okay, this one is not perfect, but this was the level that previous, let me just redraw this. Okay, this one over here, right? Previous resistance that could act as support. Price came down not exactly to the pip, right, but around there before it had a strong rally. Then this is another one. Okay, price came very close to it, right, and then had another rally. If you look back in time, okay, let's see what else. Okay, look back in time, right. This again is the previous resistance. Price breaks out, retests as previous resistance, turns support, then it goes up higher. This is the previous resistance. Price breaks out, retests, goes up higher. And yeah, you can pretty much see what I'm trying to say over here. Okay, now if you've enjoyed the market analysis, right, then I want to welcome you to join Pro Trader Sage, right. This is my premium membership, right, where you will get such market analysis every single week, right. I usually publish this type of videos on a weekend to share with you my insights of the market, the trading opportunities I'm looking at, the trades I took, and much more. So that's not all, right, because as a Pro Trader Sage member, you get many benefits that come along with it. So for example, you have access to the backtest research lab. So this is a lab, right, where I pretty much backtest the financial markets to tell you what works and what don't in the financial markets. So we have different stuff going on. We have things that talk about stock markets, quantitative trading, and much more. So all this over here in the backtest research lab, and I regularly add in new lessons, new findings that I have in the financial markets. Then also we have the weekly trade alerts. This is basically, right, the video that you have seen earlier, but it's on a weekly basis. So every single week I publish such videos, right? So you can see my analysis, my thought process, the trades I took, and you can, shorten your learning curve and quickly, level up your trading. So you can see that, every week we publish a new video on the markets. And moving on, right, we have a forum coming soon. So for those of you who are watching this right now, the forum might already be up. Okay, so this is coming soon. We have a premium trading strategy guides. This is for you, right? Especially if you enjoy reading my blog post and you want a PDF version of it. So every month we upload new PDF trading strategy guides. It's free for you to download. You can just click on it, right, and you will be brought to a PDF link, a PDF page to download it. We have a exclusive training webinars for you to help you, level up your trading, learn new trading strategies and techniques. Okay, these are exclusive webinars that you will not find elsewhere. Then we have, trading books and investing books that I recommend. Trading checklist, right? So before you put on a trade, you can, download this checklist to review it, right? To make sure that, you're on the right side, on the right page, right? And not doing anything funny or silly, right? We have the proprietary trading indicators vault. This is for MT4 users. You can download all these indicators to, help you with your own trading, like, the MACD, MT4, there's some issue with it. We have fixed it over here. We have the Donchen channel, a news reporter that alerts to you, potential, important news that's coming up, and much more. It's all over here in the indicator vault. And also we have the simple mean reversion trading strategy that you'll learn, right, to trade the market. So this is a very simple strategy for you to get started, especially if you do not know which strategy to go with. Start with this simple mean reversion trading strategy because it is back tested, right, to identify first and foremost which markets tend to mean revert, which markets have a mean reverting characteristics, right? Then I explained to you, right, the setup to trade this type of mean reverting markets, right? So you really have the odds in your favor, right? Applying the right trading setup in the right type of market condition. Okay, so this is a mean reverting trading strategy that anyone can learn, right? Even if you have no trading experience. So this is what you'll get, right, as a Pro Traders Edge member, right? New content are updated regularly for the Backtest Research Lab, weekly trade alerts, premium strategy guides, and much more, right? And also forum is coming up soon, so you can interact with like-minded traders. So I'll put the link below so you can check out Pro Traders Edge. And with that said, right, I hope you've enjoyed this video, and I'll talk to you soon.